Welcome back to Explain the Charts, your premier destination for in-depth market analysis. Today is July 30th, 2025, and the S&P 500, tracked by the SPY ETF, finds itself at a pivotal point, strongly influenced by significant economic and geopolitical developments. We'll start by breaking down the most recent news, which is crucial for understanding the prevailing market sentiment and potential catalysts. The financial world is keenly awaiting the Federal Reserve's interest rate decision later today, a highly anticipated event that often dictates short-term market direction. While the Federal Open Market Committee is widely expected to maintain current interest rates, there's considerable speculation about the tone of Chair Jerome Powell's accompanying statement. Notably, sources indicate an anticipation of a slightly more dovish stance, potentially influenced by dissenting opinions from governors like Christopher Waller, who favor rate cuts. This expectation is already contributing to pre-market stability, with S&P 500 futures showing slight gains today. This subtle shift in Fed commentary, if confirmed, could very well serve as a significant bullish impetus for equity markets, signaling continued support for economic growth. Adding another layer of complexity, U.S. and Chinese trade talks concluded yesterday without a definitive agreement on import levies. This leaves the market in suspense, with all eyes now on President Trump's upcoming decision regarding the extension of the tariff truce, set to expire on August 12th. Such ongoing trade uncertainties introduce an element of geopolitical risk that could easily trigger sharp reactions in the market, making headlines volatile. Furthermore, we are right in the thick of earnings season, with major tech giants like Meta and Microsoft reporting their quarterly results, which are always potent drivers of market movement and sector-specific performance. From a recent performance standpoint, the S&P 500 notably snapped its impressive six-day record streak yesterday, retreating slightly from its fresh all-time highs of 6,370.86. This minor slip is a common occurrence after extended rallies and can often be attributed to profit-taking or increased caution ahead of major announcements. Now, let's transition to the charts to scrutinize the technical picture and observe how these fundamental developments are translating into SPY's price action. On the daily chart, spanning from March 2024 to the present, the overarching trend for SPY is unmistakably bullish. We can clearly identify a consistent pattern of higher highs and higher lows, reflecting robust and sustained buying pressure that has driven prices up significantly. A particularly striking event on this chart is the sharp correction witnessed in early April 2025, when SPY plummeted from highs around 567 down to a significant low of 481.8 on April 7th. This dramatic decline, as evidenced by the surge in volume on April 4th and 7th, suggests a strong, perhaps even panicked, reaction to a major market-moving event, likely related to economic data or policy fears. The sheer volume during this period highlights intense selling, immediately followed by equally strong buying interest, suggesting significant institutional activity. This level around 480 to 500 proved to be a critical support area, as the market found a firm bottom there, demonstrating the underlying strength. What ensued was a remarkable V-shaped recovery, highlighted by an astounding 11.18% single-day jump on April 9th, demonstrating the market's strong underlying demand and rapid absorption of selling pressure. This swift rebound from the 480 to 500 psychological zone solidified it as a crucial long-term support level, where buyers eagerly stepped in to defend against further declines. Following this powerful recovery, SPY successfully resumed its upward trajectory, pushing through previous resistance barriers and establishing new all-time highs. This sustained bullish momentum suggests that market participants are generally optimistic about future growth and are consistently ready to buy the dip whenever opportunities arise. Transitioning to the 1-hour chart, which offers a more detailed perspective on recent price action, we can observe the consolidation and minor pullbacks that have occurred around current all-time highs. By focusing on the period from July 9th to July 17th, we identify tighter intraday support and resistance zones, indicating short-term trading ranges. The market attempted to sustain its climb, but encountered resistance just above 625 to 626, leading to a modest retracement as buyers took a pause. This chart helps illustrate the short-term choppiness even within a strong uptrend, as traders react swiftly to daily news flow and adjust positions. Now, let's zoom in even closer to the 15-minute chart to analyze yesterday's trading session, which directly shows the S&P 500's retreat from its record streak and its current position. On July 29th, after an initial opening around 638.35, SPY experienced a gradual, but noticeable, decline throughout the trading day, ultimately closing lower at 635.26. This downtick, coupled with a significant pickup in volume during the selling periods, corroborates the news of profit-taking and initial market apprehensions stemming from the unresolved trade talks and the impending Fed decision. While there was selling pressure, it appeared to be more controlled profit-taking rather than a widespread panic sell-off, which is important. This granular view reveals that even small intraday trends can offer lucrative trading opportunities if identified quickly, especially with volume confirmation. For immediate trading decisions, these shorter timeframes are invaluable for pinpointing precise entry and exit points and managing risk effectively. From a bullish perspective, the short-term outlook hinges significantly on the Fed's statement today. If Chair Powell's remarks are indeed perceived as dovish, it could instantly bolster market confidence. This could potentially drive SPY back towards and beyond its recent 638 highs, making new records. Strong earnings reports from major tech companies this week could also provide substantial upward momentum, as these giants hold considerable weight in the index. For the long term, the prevailing uptrend, the market's demonstrated ability to recover from significant pullbacks and a generally positive economic outlook continue to support a strong bullish case for SPY. Investors with a longer horizon might see any dips as buying opportunities within this established trend. Conversely, a bearish short-term scenario primarily revolves around the unresolved trade dispute with China. Should President Trump surprisingly decide against extending the tariff truce beyond August 12th, it could trigger a more pronounced market correction, as trade uncertainty directly impacts corporate profitability and global sentiment. Furthermore, if the Fed's statement turns out to be unexpectedly hawkish, or if earnings reports widely disappoint expectations, we could see an acceleration of the recent downward pressure. In the long term, while less probable based on current robust data, a significant deterioration in global economic conditions or unforeseen geopolitical events could lead to a broader, more sustained market reversal, necessitating a reevaluation of strategy. For traders, identifying key price levels and understanding their significance is paramount for strategic planning. The immediate resistance is at the recent all-time high of approximately 638, with the psychological 640 mark serving as the next major hurdle for any bullish push. On the support side, yesterday's close around 635 acts as an immediate pivot point. Watching how price reacts here is critical. A decisive break below 635 on higher volume could signal further weakness, potentially leading SPY to test the intraday support levels around 620 to 622, as observed on the 1-hour chart, which represents a short-term trend reversal. For more significant pullbacks, the strong psychological support around 550, which has held firm previously in May/June 2025, would be a critical level to watch for bounces. And in the event of an extreme scenario, the robust long-term structural support near 500, a key reversal point from April 2025, represents a crucial area for potential re-entry or a strong bounce. Volume patterns around these key levels will always provide valuable confirmation of the strength of any breakouts or breakdowns, indicating conviction among traders. To summarize our in-depth analysis, SPY is currently trading around the 635 level, having experienced a minor pullback after a formidable record-setting run. An unbiased prediction suggests a moderate likelihood of a short-term rebound towards the 638, to 640 range if the Federal Reserve's decision today aligns with the anticipated dovish tone. This positive outcome would be strongly reinforced by continued strong corporate earnings and sustained investor confidence, potentially pushing SPY to new heights. However, there is a distinct possibility of a downward correction testing the 620 to 622 support, or even the 550 level. Should the Fed's rhetoric prove unexpectedly hawkish, or if the August 12th tariff truce decision results in an unfavorable outcome, specifically the non-extension of tariffs, which would create significant economic headwinds. Looking further out, the long-term trend appears strong for SPY to continue its climb towards 650 and potentially higher, assuming global economic conditions remain robust and corporate fundamentals stay supportive, providing a solid foundation for growth. Crucial upcoming factors to closely monitor include the precise language of the Fed's statement, the market's immediate and sustained reaction to this afternoon's announcement, and the performance of key tech earnings reports throughout the week. Lastly, the resolution, or lack thereof, of the U.S.-China trade truce by August 12th remains a significant looming event that could trigger the next major directional move for SPY, requiring close attention. Always remember to conduct your own thorough research, utilize robust risk management strategies, and stay informed on global economic developments to navigate these dynamic markets effectively. Thank you for tuning in to Explain the Charts. We hope this analysis helps you make more informed trading decisions.